Hello everyone, we'll start in a few minutes. We're just gonna wait for everyone else from the Skype group to join before we start. I'm gonna talk about expiries. If you're not watching this live, you can scroll a few fast forward a few minutes because we'll be waiting, as I said. So let's wait a few minutes before we move on about expiries. Okay guys, let me know if you can hear me. If you have any questions, just type your questions and I will take a look and try to answer as best I can. We're waiting a few more minutes. Usually it takes a while before everyone can join. Hello everyone, can you hear me and do you got sound? Hello, Ronald. Do you have sound and picture? Can everyone hear me? Can you hear me now? Do you got sound? Okay, if you have the sound, we can move on. Okay, guys, let's start. So we're gonna talk about expiries. Milos did a session about expiries last week, so it's my turn to talk about my expiries. I usually do around 10-15 minute expiries on EURUSD. So I've got the EURUSD chart here. I've got stochastic oscillator down here with overbought, oversold positions. It's the 533 stochastic oscillator that you know from earlier. And we also have two EMAs, moving average 50 and SMA 50 and EMA 200. And so we're gonna look at the expiries. So let's go to a lower time frame. I'm gonna show you a trade. I've talked about this one before, but now I want to explain the expiry. So let's first find it. So here it is. Okay, so in this case, the trade I took at the touch here, you see this candle here. I'll remove the line, just put an arrow. Okay, so what the expiry was about 10 minutes. Let's go to a lower time frame. There it is. Okay, so this was the 16th. Let's see if I can show you the picture. February. Hey, newcomers, we've just started. I was just talking about stochastic and EMAs that I have plotted on the chart, and we're going to talk about expiries. Just a second, let me see if I got the right positions. It's the 12th. Anyway, it doesn't matter which one it is, we can talk about this one as well. So okay, there it is. Yeah, that's the one I've shared with you on the Skype group before about this trade, but regardless, let's concentrate on the expiries here. So what kind of expiry would you choose when trading short term? For me, it's about 10-15 minutes. And I've explained this, I've tried to explain this before, because EURUSD has these patterns that you must recognize, and you must also be aware of a few things besides the patterns before you select an expiry. So one of those things is the overall trend, and I'm talking about the major trend on the higher time frames. So that's one of those things. The second one is well, obviously how strong the support resistance is, if it's on a daily chart or plotted on weekly or monthly charts, or even the 4-hour charts or something like that. And so you got the overall trend, support resistance, strength, and the patterns. So that's pretty much it. And one more thing, by the way, it's about how many time frames you have agreeing with each other about oversold and overbought areas. Okay, so for example, let's see how many overbought time frames we had. 5 minute, 15 was overbought, 30 minute was overbought at this position. The hourly was also overbought. How about the, as you can see, 4-hour was not overbought. This candle was, price was moving up, right? So let's go back. So we know the 4-hour was moving up, so price was going up. And also one more thing, let me zoom in. One more thing, as you can see here, the price was actually in an uptrend. Okay, so if you look at the 4-hour and daily, you would see the price is above the EMAs. I'm talking about before what happened after this line. Okay, we don't care about after this line, just talking about previous history. So it was an uptrend. So having an uptrend, but at the same time having this resistance line that was support, as you can see here, was support and resistance here. So now this became resistance, and even though this 4-hour candle was, I mean, the position was oversold, obviously. If you look down here at the stochastic, always look here, you have a sharp turn at the touch. So the 4-hour was moving up, but still you can see that the previous position was oversold much higher up. At least the previous higher lows that I'm talking about, that were in the uptrend. And you see the strength of the uptrend was good because of the distance between the EMAs. But now the strength has weakened because it's closer to the EMAs, and as you can see later on, it broke it. It broke the SMA 50. So this candle was moving up, and since I'm doing 10-15 minute trades, I don't care that 4-hour time frame is oversold, or at least not completely overbought. So then you move down to the hourly time frame, and as we saw, it was overbought, or at least it was getting overbought, because we didn't know this at the time the candles were moving up. We just knew we had to wait, but we knew it was gonna get overbought. This is something you have to learn about the stochastic oscillator. You have to understand before it even gets overbought or oversold. You have to understand this, that okay, if the next candle closes around this area, it's gonna get overbought. So you have to know this, because then you already know when the stochastic is here that's gonna get overbought when this candle reaches up there. So you have to But you will learn once you have seen it happen over and over. You will learn. The same with the lower time frames. You know this candle is moving up already here or already here. You know what's going to happen. Okay, it's going to make the 30-minute time frame overbought, so it's going to move up. So where is it going? It's going up here because you have a resistance line there. And then we move down, you have the 15-minute time frame. The same thing goes there. As you can see, it's just the same thing. And yep, that's the correct one. So finally the 5-minute time frame. So this was the touch. And let's go to the 1-minute time frame to look at. There it is. That's the trade. I shared this trade on the previous video. If you look at the title about the Skype group, just look in our videos. Look in the video section. You'll see in the playlist somewhere about the Skype group. So this was my entry here. I couldn't enter at this position here, but let's talk about the expiry. So as you can see, there's a lot of things you have to consider. I can't just tell you, oh, I'm doing 10-minute expiries and you have to do 10-minute expiries, because then you're going to come back and say it didn't work for me, because an expiry is just something that works with with your own skills, with your own experience, with your own strategy. So to just say choose a 10-minute expiry, it's not going to work for you. But what I can tell you is about those patterns and those things that I look at and why they work. So I entered at this. Show you. Actually, show you this. Here it is. Let's see here. Okay, do you see this? Does everyone see the picture? Can you see the picture? Please confirm that you can see the picture. Great, thanks. Alright, so as you can see, I didn't enter at the peak. It was too fast, as I explained in the previous video. So this was my entry at 6:02, okay? Hour 6 and 2 minutes. So usually I want to enter at the full hour or at the half hour or just a few minutes before or after. But the deciding factor is the touch on the line, and as you can see, it kind of touched almost, and it was too fast. So why did I select the 15-minute expiry? Okay, so the expiry I selected was at this candle here. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, so it was 13-minute trade. If I have entered as I wanted to up here, I would have had a 15-minute expiry. Well, actually a 16.5-minute expiry. So the entry, the deciding factor for the entry is of course the touch on my line that I have analyzed. I know about the overbought or oversold positions. I know about the trend. I know about the entry. But the deciding factor for the expiry is just based on experience. So in this case, just a second. So in this case, a 13-minute expiry. Now see what happened. The price was moving up. Okay, so what I don't know is whether it's gonna continue up after my trade, or is it gonna fall, or rather, when is it gonna fall? So that's why I want to quit the trade rather after a short time, so I don't get caught into, as you can see what happened afterwards. Price came up again, touched again. I didn't enter at the second touch because, as you can see, it did continue up. So if I had another 10-15 minute expiry, 1 2 3 4 5 6 7 8 9 10, I would have lost here. So that's why I just took the first entry, then I was out, and then no more trades. And as you can see, it did go up, then it fell. So yeah, I could have probably taken a longer expiry, like an hour. That would have worked too, but I do trade short term, and these are the things that you must understand. Look what happened. This is one of those patterns I'm talking about. Look what happened after the 10-minute candle. This was a 10-minute candle that started here. Price moved up, right? Just continued up. Now let's remove this line here. Put an arrow. And let's remove this one. Good check mark here. This was the candle. Okay. So as you can see, if you're not fast, if you enter here, if I had entered here, and I have chosen a 15-minute expiry. Now in this case, this was early in the morning, but usually the 15 price turns against you. This is your USD. It just works like that. I don't know why, but it just does. Now you can go back and watch history, and you can see what happens. You can see this happening over and over. So let's take a look at another similar. This was the 20. You can just go back and look for on the 1 minute candle, just select a date, whatever you wish, and just scroll and look back, and you will see this happening. Not all the time, but it does happen often. So before we move on, let me know about your questions. Tell me if you have any questions. Okay, so if you don't have any questions, what about the 1 minute charts? So, okay, I got one question here. How to know if the price won't break the line? You mean after you have entered the trade? Well, what you know is that at this level, when you enter, after you've done your analysis, you know that at this level people are gonna start selling. Okay, so once you've done all your correct analyses, you know they're gonna start selling. Just like the other trade here, let me show you the other trade. Okay, so look at this other trade. At 1805, expiry was also 15. Okay, if the price touches my line after the full hour, a few minutes after, like in this case, I go with the 15-minute expiry because I want at least 10 minutes. And if the price touches earlier, I go with the 10-minute expiry. So the question is, wouldn't it be safer to wait? In fact, it will definitely not be safer to wait for it to start heading down, because when you're doing short-term strategies like this, short-term expiries like this, you want every pip counts. You don't want to end up taking the trade when you're already here. As you can see, after 10-minute, price came back up to the same level. So it's not wise to wait. You want to enter as quickly as possible. So the most important part is actually doing your analysis right from the beginning, so that you have the best possible support and resistance line. And if you do that right, there shouldn't be a problem. You will enter as soon as it touches, and then price is going to drop. And you can see this in all my trades. Price touches, then it drops. Touches, it drops. And we had the next trade I did. It was here. The same thing happened. Let's find this one too. Here it is. The touch. So let's see, this time we had resistance here. You can see the candles, so you know they're gonna sell. That's what you know. Okay, you know they're gonna sell, and you want to sell at the same price they're gonna sell. So I'm thinking like the Forex people. This is how I approach my entries and expiries. I'm thinking Forex. And what does that mean? It means people are gonna sell or buy. And I'm thinking, where are they gonna sell? They're gonna sell at this level. So if my line is correct, and you need some practice, and look at this line, look how accurate it is. If you look at the history, you have support, resistance, lots of resistance here, lots of resistance here. Look at this big drop here, big drop here, big drop here, good support here. So you have a great line. And let's take a look at it again. And here you go. And one more thing is the levels. If you are from the Skype group, you know about the 42 levels. It wasn't exactly 42, but pretty close. That's just 2.9 pips away from the 42. So again, this is one of those patterns that you must recognize. So there's a lot of things that you have to understand and put together before you can have the best possible expiry. As you can see, the entry was 1805, and 10 minutes later it expired down here. So these are some things that, if you put it all together, gonna help you. And so the next trade, the EMA intercepts the resistance line, so it confirms that your line is pretty much solid. It's on the right spot. As you can see, it was above the EMA on the 5-minute time frame. That's why I don't just rely on indicators. First comes my line, second comes the indicators. And sometimes the price doesn't agree with my lines and just goes with the indicator. That happens too. But in fact it did happen here, because on the other chart that I have, I use Bollinger Bands, and the price was rejected here already because there was a Bollinger Band resistance here, and it took, as you can see, 1, 2, 3, 4, 5, 6, 7. It took about an hour and a half before it reached my target, but it did. So patience is very important. Okay, don't just go with the indicator. Sure, obviously I could have taken a put at the Bollinger Band touch on the other chart, but since I had my line, I know they were going to sell here, so I just had to be patient and wait for the touch and then enter. And as soon as it touched, you enter, and then you don't care about what's going to happen next. As you can see, look what you see the pattern here. Look here to the left. See this to the left, the first trade. Look what happened after the touch. You see the resemblance of the two trades that I took? You see this? Okay, I'll point it out for you. The first one touched, then second touch, third broke above, fell. Here again, second was touched, good resistance held. Second one came above, third one came above. You see this? Kind of the same thing happened, same pattern. Even though in both cases, in both scenarios, price eventually fell. As you can see, the second almost broke, the third definitely broke, and then it failed. Same thing happened on the next trade. So once you see these patterns, and still, as you can see, the 5-minute on the first trade was in an uptrend while the second one was in a downtrend. So that's why I don't just rely on the 5-minute time frames. I do the analysis, the support resistance on the higher time frames. And if you had looked at the both trades from the perspective of the hourly time frame, you see that they're both under the EMAs. And on the 4-hour time frame, you see that sure they are still above the EMAs, but you see the resistance here that's forming, and price is reaching getting very close to the EMAs, so about to break the trend. And as you can see, it did break the trend, so the analyzers were correct. So again, my expiries are about 10 to 15 minutes long, and you have to take the entries into consideration. If you enter too late, then just don't enter at all. And this happens to me sometimes, that I miss the opportunity because the candle gets rejected too fast, or doesn't even touch the support resistance. But rarely does it happen, because I've been better at drawing those lines to the exact positions. So shoot with your questions again, please. I know it's complicated, so ask away as many questions as you have. For those of you who are watching this after we were live, this was recorded during a live session. That's why people can ask questions in the live chat here on YouTube. And if you're offline watching this after the session was over, that's okay. You can join us on the Skype group, and you can ask and interact with others. And don't forget to subscribe so you know the next time we do a live session. Okay guys, if you have any questions, please ask away, as I'll be trying to wrap this up a little bit earlier. Okay, yeah, I mentioned those at the beginning. One of them, the blue one, is an EMA 200, the other one is an SMA 50, the yellow one. Okay, the blue one EMA 200, yellow one SMA 50. Any more questions? Please ask away. I want to talk about long-term expiries as well, because short-term trading is very different from long-term trading. So Lily, you said about shouldn't we wait for the price to start dropping before we enter a trade, right? So let me tell you that when you do long-term expiries, then yes, you would have to do that, because if we just go back to this trade, for example, here. Now, for example, look at this hourly chart. Look at this hourly chart. So in this case, then yes, you would want to wait for price to really get resisted, and for a stochastic to move down. So as you can see, the blue line here, we'll make it bigger. The blue line crossed the red line down, and they're starting to cross down. So this is where you could have entered a trade when the stochastic is dropping, and then you would have chosen, I don't know, 4-hour expiry or something, and that would have worked. So yes, if you're doing long-term expiries, and then in that case you definitely need to analyze the higher time frames, hourly, 4-hour, daily, and even the weekly time frames. So yes, when you're doing long-term expiries, you have to wait for confirmation, you have to wait for the candles to come down. But if you're doing a 10-minute trade, well, you can guess what would have happened if I had entered at the end of an hourly candle. Would have went totally against me, so it wouldn't have worked. In that case, you just want those candle wicks on the higher time frames. So you have two different approaches. Long-term traders, long-term expiry traders, you have to wait for confirmation, wait for the candle to close, wait for a bearish candle if you're doing a put, or wait for a bullish candle if you're doing a call. Short-termers like me, 10-15 minutes, sometimes even 7-8 minutes before the candle closes. Then you want to enter at the peak or at the bottom. You want to enter at the touch. Whatever it is the forex traders are going to start selling, or buying for that matter. That's where you want to enter. You don't want to wait, because then you have lost the moment, that volatility that's going to give you those few pips of wins. So you usually maybe win by 4 or 5 pips, and you can't afford to wait. And another thing I forgot to mention, actually, great. Another thing is the candles. You have to see the price as candles, the expiries as candles. So you're gonna ask yourself if this price is gonna meet resistance here, this 15-minute candle, and the trend is going down, then obviously you want the 15-minute candle to close under this resistance line, right? So that's why you want to pick an expiry that's going to allow for this candle to close under. That's not always true. Sometimes this doesn't happen. Sometimes you get a even nice engulfing candle, like in this scenario here. It went up, closed above before it broke down and fell all the way down. But this is also why you want to enter at the first touch and then forget about it, because you don't know when it's gonna eventually fall down. So I hope you understand how you approach expiries. I know it's difficult, you need lots of practice for understanding this. Okay, so final questions, please. If you have any questions about expiry, whatever, even if it's not related to the expiries, just ask away. You have your chance now. Anything? Okay, so why the stochastic? Well, this is, first of all, that's just something I'm most comfortable with, the stochastic. And because it confirms those oversold, overbought positions, and it confirms my lines, my resistance, my support resistance lines. It confirms the EMAs. Basically, the stochastic confirms everything. It confirms the trend, confirms support resistance, confirms overbought, oversold, confirms higher lows, lower highs. That's 4 things. And also the direction of the candles, and well, you can see the direction of the candle, but the direction of the movement, current movement. For example, if you have this sharp bounce on the stochastic, when you see it touches and then boom. But mostly because it confirms everything that I see on the based on the price action. So I place my line and then I look at the stochastic. Is it going to get overbought when it touches? Okay, do I have 4 time frames overbought or oversold? Okay, then I should enter the trade. Some people like to use the RSI. I used to use the RSI as well, but I found that the RSI basically, it stands for Relative Strength Index, and you can see the Relative Strength Index based on the candles and the trend. So you don't actually need it. That's at least that's how I felt. I felt that I want to know overbought or oversold. I want to know if the 30-minute time frame is overbought when I see a lower high, or is just a fake lower high. And actually the stochastic helps you find these fake positions, because you get, as you can see, price comes up there and then closes down here, and then you see that it's not completely overbought. So let's wait for the touch, and then as you can see here, when it finally did touch, that's when it finally touched the overbought position, the 80 level here. So at least on this time frame, you have the other time frames as well that were completely overbought. So kind of helps you figure out what's going on, or when it gets oversold quickly here, so you would expect it to move up again. Because if you didn't have the stochastic, then you might as well think that, hey, this might drop because of this candle wick you have here, this drop, and then this candle wick, we have resistance, so it might actually drop. But then you see, okay, the 5-minute already got oversold that quickly, so it might actually turn up. So stochastic is very helpful. Any other questions? One more question, and then we can wrap this up for today. I'll be doing some short videos in the near future about indicators, for example, moving averages, stochastic, relative strength index. This is for people who are total beginners. They don't know about any technicals at all. They haven't seen a chart. So those videos will be helpful for total beginners. And you can also read and study indicators at binaryoptions.soc.com, and join the forum and use our free demo account, CommuniTraders forum. And remember to add us on Skype, CommuniTraders-Live. It's the name, CommuniTraders-Live, just like the YouTube channel, which you can subscribe to, so you can know when the future live sessions will be, or the how to use tools videos and more educational videos. And join us. And we also do private sessions for newcomers, so just join us and talk to us. We'll help you out. Okay, thanks for joining. Thank you guys. I'll see you in the Skype group. Thanks guys, bye.